Today I'm going to show you guys a strategy that has gotten me over 4 consistent payouts. It has a 60% win rate, and out of my 6 years of trading, bruh, this has been the most easiest and simplest strategy I've ever had. And I'm going to break all this down step by step in under 10 minutes. First thing that you want to understand is your open low high close and your open high low close. Now picture this as a daily candle. This can be your weekly candle, this can be your 4-hour candle, this could be your 1-hour candle. This is the first step to framing out a high probability setup. You want to understand where this daily candle is going with a high probability. This candle is going to only 2 things. That's an old high or an inefficiency. So in this example, previous daily high and a higher time frame bearish fair value gap if you're going higher. If you're going lower, you're gonna open high, low, close. You're gonna go into a old low, which for example, this is the previous daily low, or a higher time frame bullish fair value gap. And these areas are not that subjective, as long as you stick to this. Now, if you guys don't know what a fair value gap is, to simplify it, is a 3 candle pattern. If you're bullish, you have your first candle, your second candle is the one creating the imbalance, and the third candle is the one that opens to establish that imbalance. And notice how this is open, right? Same thing with the bearish side. Your first candle opens, second candle expands, displaces, and then your third candle is what validates it by not closing in all this whole candle to this wick, right? So that's your FVG in short. Now, once you get a high probability on where that daily candle is going, or whatever higher time frame candle that you're using, step 1 is complete. Now let's move on to step 2. Now step 2, we're looking for an opposing liquidity run. And we're not picking any random high or low. We're going based off of time, because it's time first, then price. And it's not subjective. The key opposing liquidity runs that I am looking for are at previous daily highs and lows, Asia highs and lows, or London highs or lows, okay? There's no subjectiveness to this. It's straight to the point. So when you look at this bullish daily candle, when we open inside of there on a 15-minute time frame or 5-minute time frame, we created Asia, right? We ran lower, taking out Asia's low, okay? Creating the low of the day, which is the Judas swing, manipulating everybody thinking that this day is gonna be bearish, okay? Once we have that opposing liquidity run, then we start getting interested. Just like on the bearish side, if you're expecting price to go lower on this higher time frame candle, for example, this daily bearish candle, inside of that daily bearish candle, you'll have a open Asia high, Asia low, run up higher, run out Asia high, right? Manipulating everybody thinking that this is going to be bullish. And then we start getting interested and we start paying attention for the third step. That is the entry inside of a fair value gap or inversion fair value gap. But the main key thing that you want to focus on is displacement. You want to see after we run out an Asia high or London high or Asia low or London low, you want to see displacement back through that higher low and look for a fair value gap or inversion FVG quickly traded through. Once that happens, then we take our entry. So our entry would go inside of that FVG, stops below the first candle of that 3 candle pattern, targeting a 1 to 2 minimal, okay? So if you're bullish, entry on that bullish fair value gap or bearish inversion FVG that got traded through. And if you're bearish, you're entering off of that fair value gap, stops above the first candle's high, targeting the previous daily low, and a 1 to 2 risk to reward. Now let's go over a few examples. Okay, here's our first trade example. On the daily chart, we had ran into a higher time frame daily bullish fair value gap, and we closed with a rejection wick. So on this day, I'm looking for an open low for it to come higher and attack the previous daily high and then close. When you scroll down to the 15-minute time frame, we have our previous daily high up here. We've already ran up higher, taking out that Asia low after midnight open price, and midnight open price is down here, right? but we're at 930. Now you could take a buy off of this fair value gap and before they open and then aim for the previous daily high, but typically it's a lot more high probability if you wait for 930 open to show you what it's gonna do. 930 opens, we come down, we run lower, we hold that low, but we don't create a fair value gap in here, so I don't want to take that yet. We displace lower again, taking out the London low now. I'm not changing my bias, but we have to wait to see what price does here. We have a displacement higher closing through this inversion fair value gap now. So if you like taking inversion fair value gaps, this could be your entry here. But I'm gonna show you what I like taking. Now that we created a fair value gap, I'm gonna put my entry here when my stop's below the first candle. Now I could target the previous daily high, but this is already giving me a 1 to 2 risk to reward if it comes and taps me in. Now I got tagged in. Now let's see what price does. Okay, we don't get scared here. We either get hit out or we don't. We don't micromanage the stop loss. We don't exit out early. Okay, we let the trade breathe and we let the trade do what it's gonna do. So that's the 1 and 2 right there, and you're done. You hold until price gets to that TP. Once price starts expanding higher, maybe you can manage your stop loss halfway or at break even. You don't have to touch it at all and just let price go to the 1 to 2 or it hit you out. I like to manage my stop loss, but if you see price expanding towards your TP, you're gonna want to move your stop loss. Now here's our second trade example. When you look at this daily chart, what is more probable that price is going? The previous daily high or previous daily low, right? More so the previous daily highs, because we're holding fair value gaps. We held this fair value gap. Now I'm looking for this next day to open low, go up higher, and take out the previous daily highs. Midnight open price, and we immediately ran out the previous daily low. Now I want to see what happens here. Do we run up higher? Because if we keep expanding lower, then that tells me that I shouldn't be targeting the previous daily highs anymore, and I should stop trading for this day. We immediately revert with a V-shaped reversal, closing in what? This inversion fair value gap right here. So what am I expecting? For us to start running to that previous daily high. Now I could be a buyer at this fair value gap and hold for a 1 to 3 risk to reward targeting that previous daily high, but we're not yet at the open, and it's more high probability to wait for the open. Now we opened and we came down, right? Almost knocking out the first position if we didn't wait for it open. Now if we want to wait for more confirmation, now we have this 5-minute inversion FVG. Once we close through this inversion FVG, I'll take a buy right inside of there and then target the previous daily high for a 1 to 2 risk to reward. We hit TP right there. So if you didn't take this first position and you wanted to wait for more confirmation and take the second one would have worked out as well. You could even do this. You could even cut your risk in half, risk half of your position on that first entry, and then scale in on that second one. And that's what I like to do a lot of the time, because it increases my risk to reward a lot, to where a 1 to 2 risk to reward turns into a 1 to 4. So let's say you're risking $100 on this trade. This $100 position turned into a $400 win instead of a $200 win. And you would actually be making a lot more because that risk to reward was like a 1 to 4, 1 to 3. But if you got stopped out, it will only be $100, bro. Now let's see how far this went. Now you're not gonna catch all of this, okay? On a normal trading day, it takes a lot of mental capital to try to hold and capture this whole lion portion of the move. But all you need is a small piece. A 1 to 2, 1 to 3 is completely fine, and you don't need any more than that, especially with a 60% win rate. Now listen, you're gonna take losses, bro. Trust me. There's no strategy that offers a 100% win rate. I don't care if you go to algo trading. I don't care if you go to support and resistance, trend lines, ICT concepts, whatever. It could be the most simplest strategy in the world, and you could still mess it up. So make sure that you follow this simple process, follow simple rules that resonates with you, that you're comfortable with, and execute based off of that. Backtest and forward test this strategy and make this shit your own, bro. And if you would like to see more trade breakdowns around this strategy, let's get this video to 20 likes. If you're new to the channel, sub to the motherfucking channel, you know what I'm saying? But yeah, y'all, I'll see you guys later. Peace.